Hey traders, welcome back to another trades review video. So today we're going to review one of our trade club members 2-month performance. If I'm not wrong, it's been pretty flat. Things have been rather slow, even from my side as well. February was okay, but March was definitely slowing down. So if you look at March 6th or February, let's go into it. So it's a -1 hour dollar yen. One thing I can say is maybe just highlight the strategy or the pattern here. There's a buster flag, price pushed through highs, rejected the area, anticipated some rejection or short-term reversal to the downside. Sort of a mean reversion setup, pretty straightforward. And this is what we call a typical just key level rejection, but enter right after seeing that price broke under the flag. Very nice. Okay, so what happened here was the setup seems to go pretty well, but very unfortunately this trader got tapped out before the actual move actually began. So in that case, I'll say it's rather unlucky. But if you zoom in a little bit into this chart, stop loss placement wise could have been slightly above this high. So for majority of us, we know if you're looking to place a stop loss, it's always better to have a level to sort of guide your stops. For this one, you see the stop loss was fine if you're referring to this minor high. But if let's say if you expect price not to go back to the high, a nice sensible stop loss placement will be above the swing high here. See that tiny spike? Because when price did this kind of spike previously, there is a slim chance where it will go back to retap the high before it starts dropping. Because if let's say you didn't get stopped out on this trade, it would have been definitely a 3 to 4 hour trade, because you see after seeing price failing at this area multiple times, it would have been an exit signal. So it was unlucky, yes indeed unlucky, but the stop loss could have been just a little bit wider. Alright, see TP level is also not valid as there is a support that needs to be aware. But the real issue was actually not your target setting, because after seeing price keep, you see bounce, kept bouncing off this support zone, it could have been an exit signal for you. So and one thing I would also like to say is I like the fact that this trader did not rush any entry. Alright, you can see that there's one position on 6th of February, then the next position was all the way to 15 or 16 of February. So let's have a look at the missed trade here. So one of his support, which is very significant, I think is support not resistance. From the 4-hour chart, you can observe more how price react at this level. Then price eventually have that reversal, held above the area. Very unfortunately, again missed out the entry by a tiny little bit, because I believe this would have been a limit order entry, a limit entry. So yeah, very unlucky. So again, waited for the pullback to join the long, enter based on limit order. Then running quite well. We'll observe if price can break the high, and it just collapsed. All right. Okay, so the problem with this position was mainly the management side, and I like the fact again that there's a full transparency here. That's why I like about this trader was the fact that you see she missed out a trade, she noted down, then after that price have that massive rally, then she looked to join a retest, and right after price revisited the high, she even mentioned that I got stopped up by news. As per my rule, I will need to move my stop loss to break even due to uncertainty of news, but I didn't do it. Ended up getting stopped for 1.4R, -1.4R. So that's a lesson here, to always remind yourself to protect the downside. Always protect the downside. All right, so this was a very good trade, right? It's a +4R on personal account. hold on personal account and positive 8R. Right, so see that, so it was a nice long. Let me see if I'm not wrong, he took a long above the break of that 1.08. Then she's waiting for price to pull back to the BNR area. Very simple, very straightforward. Got tagged in, then price pretty much just shot all the way up. Then yeah, very solid BNR trade. Really nice. So nothing much to discuss here. It's really a textbook trade. See that TPF reversal, the break above that 1.08, coming for a retest. Then we just completely pushed through the upside. So sort of a retest, double retest, then we just completely push up. Very nice. For our trade, negative 1 hour dollar cat. So dollar cat was definitely more on the range bound side for the past 1 to 2 months, right? I personally, I did try to trade dollar cat, but I realized that price action was a little bit range bound. Range bound means we're in a balanced market. We have lots of fake outs. We got lots of zigzag formation. So yeah, so if you look at this trade, same thing as well. Went to 3R, get back into loss. Should have moved to break even. So normally, if I have a position that run for 1 to 2R, I wouldn't really interfere the position. But when it goes beyond 3R, that's normally when I'll try to step in and say, hey, maybe I need to protect the downside. So in this case, you see run for 3R, and the way that price came back, then broke through this resistance. See this zone here. So you see the way that price dropped nicely, then you just suddenly reverse from there. That's what we call a potential wrong in direction. I remember even myself, I was wrong on dollar cat multiple times, but I didn't actually participate. But I was wrong on my breakdown as well. So you see price retapped the OMSS area, then it completely just reversed, tried to squeeze this area again, didn't have to follow through, we just completely broke all the way up. So should have moved my stop loss to break even in this case, but overall I still I like, just there's a lot of sensibility here. You understand what you're doing, right? You know where's the mistake, so it's not bad. It's really not bad. Yes, the management side could have been improved, but the way you look at the market is quite similar to the way I look at the market as well. Euro dollar break even, hold on funded account, personal account. So basically a break and retest as well. Then price was way too slow. Nice, close the trade for break even. Okay, so it's a good decision, right? Because price broke through that 108.39, and yes, indeed we have a BNR setup here, but what's not so high quality about this setup is the fact that it's a minor BNR, and market has moved quite significantly onto the upside. Normally you'll start seeing some exhaustion, some rotation here, which means you're about to see some slowdown in price action. If you're correct, you'll eventually go up, but normally it will take some time. If we look at the stop loss here, definitely a little on the tight side as well, about 8 pip stop, but I'm not someone who would like to say, oh, your stop loss is way too tight. As long as it's not under 5 pips, it's not so crazy. I normally wouldn't say, oh, your stop loss is way too tight. Normally I wouldn't give that opinion, but what I'll say is have your stop loss set at a sensible level, whether if it's 10 pip, whether if it's 15, 20, 25, any figures are fine. As long as you know what you're doing, then it's pretty much fine. But that's pretty tight, but good thing is you close it out for break even. So very nice management. So another squeeze above that 108.39. Again, euro dollar, lots of euro dollar trade. Then got stopped out. So okay, stuck to the plan, got stopped out on the flag. It's fine. It's really fine. Okay, so there's not much to discuss on the last position. Let's talk about March, right? That's February. Let's talk about March performance. So dollar cat short, that was where I even myself personally, I got stuck trying to trade dollar CAD, but again, luckily I avoided them quite a few times. Then you see, okay, that's what happened when market is on a balanced market, when it's pretty much just range bound. You see price first thing first zigzag in between that EMA. See that? Cross the EMA is bullish, EMA crossing bearish, crossing back bullish, crossing bearish, crossing bullish. So when you start seeing the EMAs, when you start seeing price just sort of spike through the EMAs multiple times, like zigzag, zigzag, that's normally a big indication of maybe we are about to enter some sort of consolidation, about to enter a range market, or what sometimes I call a balanced market. You see, already knew that it would have been stopped and expected that, but because price didn't respect the rejection and price action was not good, entry was not good, management was even bad, need to solve this. So you don't have to say so many bad things. What I can say is the management. Entry, as long as you stick to your entry criteria, entry is usually not the problem. Most of the time problem comes when really comes in handy on the management side and you exit. Because when you enter the trade, lots of times we enter a position because the market condition, the criteria, everything ticks off our list, so we take the trade. But lots of time the follow through was the problem. Sometimes as a trader, because we are so emotionally invested onto a trade idea, maybe you waited for the setup for lots of hours or maybe multiple days. So when it finally comes, we normally will just stick to it, and it's a good thing. We stick to the trade, we are committed to the setup, and once we get in, lots of times things shift. So when things shift, it is not easy for us as a trader to sort of detach ourselves and say, hey, I know I've been waiting for this setup for quite some time, but I realize something is wrong. So that sensibility, that objectivity of saying, hey, I waited for such a long time, but it doesn't mean it will turn out to be a good setup. So that's more to expectation, that's more to emotional control. Even for myself, I had 1 to 2 losses on dollar CAD, pretty much the same thing. Entered the trade, got chopped out, then yeah. So I like the fact that she say there's only 2 entries on this kind of trend. Actually, I entered in a mid-range. Let me just adjust it. I entered at the mid-range, alright? So she basically entered at a mid-range. This is something that we always highlight within our community, within our trade club. I always tell my members, hey, try to avoid entering mid-range setup, because lots of times you actually get chopped out. Even if your trade idea is correct, even if your direction is correct, lots of time price chopped you out before the actual move. Unless you have a super wide stop, 40 pips, 50 pips. Otherwise, it's usually not a very good idea to enter it on a mid-range, because there's a lot of uncertainty. Alright, price position is definitely not good. Couldn't see confusing support, should have been removed it. Yeah. So you see, your dollar break even, when you got more break even, means you're also focusing on protecting the downside. So yeah, broke even because of the news. Decided to close it as near the news, don't want to take the risk, and it's a good decision. If you didn't close the position for break even prior to the news, you would have lost at least 2R. Right? Or normally on spike like this, you got tapped out for negative 2R. Yeah, very good. Overall, still a very good setup, but price decided to pull back a little bit deeper into that secondary zone, 1.0870, I believe, then completely reversed to the upside. It's not a bad trade. It's really not a bad trade. Sometimes you see here we got a solid bull flag. Sometimes prices decide to head towards another level, a little deeper before you go back up. So it's not a bad trade, not your problem. Small loss trade. Euro yen short. Let me see. Moving to my favor. Yeah. So again, very good management. The fact that you closed it out, even though you held it for 2 days, but you were flexible enough to say, hey, I'm gonna close it for a small loss. That's good. Yes, you did lose a bit of swap fees, but at least you managed the downside. You only lost about negative 0.2 R. So that's pretty good. All right, very nice setup. Very nice setup. There's a TPF, high bigger picture TPF here with left shoulder hit right shoulder, shorted to the downside. Price dropped, failed. It really failed to sort of break under that 161.20, 161.10. Then we just reverse from there. All right, very good trade because your trade management was on point. Dollar cap break even. Let me see. Okay, so it eventually went to 3R. Could have stayed in the game if I didn't BE the trade. However, just following the trade, should not put in stop loss to BE. I'm not sure what's the exact reason that you moved your stop loss to BE. Because price pretty much moved into your favor. Your stop loss could have been a little tighter. If your stop loss, okay, one of the main reasons why we have the urge to quickly move our stops to break even can also be due to yourself having an overly tight stop loss. If all of us just look at this trade, so where would be the ideal stop loss placement level? It would be at least above some of these high. This is not actually high. It has to be at least above some of these high, or you can use some of these candle high to sort of guide your stop loss as well. See that your stop loss was sort of in the middle of nowhere, and I'll tell you, when you're looking to trade some of these busted bull flag, or what you call a minor BNR setup, lots of times price would not be as precise as you thought. It might pull back a little deeper, stop you out, and drop. So it's always better to have a stop loss a little wider. Just give the setup some cushion and let it play out. So eventually moved to 3R, but still we can arguably say it would have been a loss as well. But yeah, at least I believe you could have secured for 1.5 R. Then price eventually went to the high, dropped all the way down. Then Euro Yen, another break even. So what happened was the setup was beautiful, but it get chopped out, and then it dropped all the way down for about 5R, I assume. Everything was okay. Everything was actually okay. But yeah, it's a good setup. It's really a good setup. Just that, let me see. Price decided to chop a little higher before it moved into your favor. I can see where you're coming from as well. Like, why did you short it there? Because you noticed that price have already formed the exhaustions here. See a bit of tiny rollover. That's what we call an exhaustion or failure dropped. Then if we recover all of these price action, definitely seems bearish. But it decided to just tap you out, then form a double top, then it dropped. So double, triple top, dropped all the way down. That would have been a secondary entry. See that BNR, a break under the 163.30 area. Would have been a re-entry here, right there on a retest, but it's okay. So that's pretty much it for the review. Overall, I would say performance was pretty good. Performance was really good. I like the way that you have your management was really on point. I can really see, it's easy to tell which trader is really focusing on the management, which trader is not. The management was on point, although at the beginning, especially February, you did have a few trade where it was on a mid-range. It wasn't that beautiful, it wasn't A+ quality, but overall I'll say the way you look at the market is quite similar to the way I look at the market. You also utilize lots of TPFs, lots of VNR, which are some of the patterns that we use a lot. So yeah, overall performance pretty good. What to improve? Possibly your stop loss placement. I realized that you tightened your stop loss quite a bit recently, especially on the dollar pairs. Could have been a little wider, not because we're trying to play safe. I don't like to use the word playing safe, but rather just try to place it above some of the sensible level. Because if you place a stop loss in the middle of nowhere, you'll always have the anxiety of, oh, I want to move my stops to break even. That's because your stop loss is not so sensible. That's why you're having the urge to say, I need to secure the position. So that's something you can give it a thinker. Then apart from that, that's pretty much it. All right, so we'll talk to you in the next video. Bye bye.